Hey everyone, Codex here. Today what we're gonna do is take a look at Elrond's native token, Egld, and its current momentum to see whether this recent move to the upside to 155 bucks is nothing but a bear trap or if the correction that we are currently experiencing is just temporary before we head to the upside once again. So if that's something you are interested in and you find these videos helpful, make sure to subscribe to the channel, like this video and click on that bell icon so you get notified when I upload a new video. Also make sure to join our Telegram channel where you can get some of my models and indicators for free, and let's get into this one. So jumping straight into our chart on the daily time frame, the first thing that we can talk about is our 200 days moving average that we are currently trending below. Now, while a lot of other cryptocurrencies are toying with the 200 days MA, Elrond has been below it for almost a month now. And this is worrying because going below the 200 days moving average usually indicates a prolonged downtrend in a phase in which the price keeps on going down. And that's what happened back in the summer of last year. When Bitcoin went down and when the whole crypto market followed its path, Elrond found itself below the 200 days moving average, and this lasted for 81 days, which is not a short period of time frame after all. Now, Elrond has been trending below this MA for about 29 days, so it's still relatively a short period of time, and I do in fact believe that this will last longer. Look, as long as we are trending below these levels, we can't really talk about milestones and new all-time highs. I see people talking about a 3 or a 4,000 US dollar Elrond, and some are even giving crazier numbers. And that's possible in a couple of years, of course. I don't know where we will be at 5 years from now, but claiming that EGLD will reach such targets this year when we can even go below the 200 days moving average is somewhat delusional. Another thing to mention is the volume profile visible range indicator, aka VBVR, which basically reveals dominant and significant price levels based on the volume. And currently Elrond is holding strong right here in this high volume node. Now, what this means is that a lot of people have previously bought in this area and it's really hard to check them out. So staying above this high volume node, which is between 135 and 145 US dollar, is very important. And if Egld can't manage to do so, then the next level to look out for will be below 100 US dollars, since that's where our next high volume node is at. Now moving to our momentum on the daily time frame, if we take a look at the KDG, we can see that we have got a cross right here yesterday between the orange and blue line, and the black line is also heading to the downside, and that's a bearish signal. And look, almost every time this happens, we end up having downside movements. We had it back in November right here, and the price ended up going down from 450 US dollars all the way to 220. Same thing right here happened back in December, where the black line started heading to the downside and the blue line started winning its ways to the downside against the orange line, which ended up with a 33% move to the downside. And this actually happened several times in the last couple of months, as I said. Now let's take a look at our Phoenix Ascending indicator, and this is, by the way, one of my favorite momentum indicators. Okay, so on the 12 hours time frame, the green line is going down and it's currently below the level of 50. However, you have to keep in mind that the blue LSMA and red RSI are still above the level of 50. So technically speaking, on the 12 hours time frame, we still have some sideways movement in the current range. Note that if the blue LSMA and red RSI go below the level of 50, which is the yellow line by the way, that will trigger a long-lasting downward pressure and an expansion down. Let me explain why we technically still have sideways movement in the short term until the blue LSMA and red RSI go lower. So back in here, the green line was in fact descending, as you can see of course, but nothing really happened. I mean, we had 3 red candles followed by 2 12 hours green candles, and that's simply because our LSMA and red RSI were high to trigger a downward pressure. However, as soon as the blue LSMA and red RSI started their race below the level of 50, it was game over and the mess started. So for now, I remain sideways on the short term. Please, I'm saying on the short term. until the blue LSMA and red RSI moved down. Long term, I'm bearish. I have been bearish for 2 months now. The first bearish Elrond video that I posted was this one when we were at 516 US dollars, because I thought we were way too overextended and a pullback was needed. My opinion hasn't changed so far long term. I still believe that we are still bearish based on the data that we have, of course. I know this is rough for a lot of you out there, especially if you bought back in November when we were breaking new milestones and new all-time highs every single time, but that's the nature of the market after all. I think learning from these mistakes is the best thing you could do, and I think blaming yourself would change nothing, of course. So, this was about it, guys, for Elrond today. Thanks for sticking by till the end. Don't forget to leave the video a thumbs up and a comment, as every bit of support helps us moving forward. Just say anything in the comment, it doesn't really matter. Join our Telegram channel where you can apply and get the models for free, and have a nice day.